Hey everyone, John Enner here from School of Trade, and today we're going to be talking about the different chart types and when we use them, and more importantly, why we use them. So one of the first chart templates that we're going to be working on, or at least a chart time frame, is going to be a weekly or daily chart. Now, weekly and daily charts are really big. They're zoomed out. There's a boatload of information in there, and the reason we're going to use those are more for an anchor sort of situation. Now, anchor charts are going to be used for finding really big support and resistance areas and big areas that we need to be careful around. Now, the one big reason why weekly charts, daily charts, they're so powerful is because hedge funds use them, investment banks use them, all kinds of different larger term fund managers are going to be using these big time frames, and that's what makes them so strong. So that's why we always want to start out, as far as an anchor chart goes, on something like a weekly or daily chart. So that's going to be the primary, as far as starting from top down, is going to be one of the big ones that we're going to look at as a weekly or daily chart. Now, the next type of time frame is going to be a minute chart, and I've got one right here. Now, minute charts are another really important type of chart. We can use these for a lot of different things, from anything from anchor charts to entry charts to pattern charts to all kinds of different things. We specifically more lean towards using these minute charts on bigger times, like 60-minute, 30-minute, the big minute types, and we use them more for anchor charts. Now, one of the big things with minute charts is there's a lot of power in them. There's a lot of wisdom behind a minute chart. Anything that has a non-specified open, close, high, low, like a minute chart, tick chart, volume charts, there's going to be a lot of wisdom in those, because not only are you seeing the factors of where did the market move, where did it go, high or low, but you're also seeing when did it do it, when did it open. There's a time factor in there, and that's what makes minute charts really powerful. It's another one of the key assets that we use in our trading. One of the other big types of time frames that we're going to be using is going to be a tick chart. Now, a tick chart is something that we're going to be using more for an entry chart. I've got an example right here. Now tick charts are... There's a couple nice things about them, and there's a couple other kind of drawbacks about them. Tick charts can be kind of messy. You'll notice here, on this chart, there's a lot of back and forth, there's a lot of chop and slop, and there's just a lot going on with a tick chart. Now, granted, this is a 200 tick chart, so it is a little bit faster, but even if you slow it down, it still looks pretty close to the same. They're not the prettiest of charts. Now, on the plus side to tick charts, you can get a lot of entry signals. There's a lot of movement going on, and again, just like with the time charts, there's a little bit of wisdom behind it. Now, it's not based on time, but you do have a variance of the open, close, high, low. So there's still a lot of information that you can gather from tick charts. Now, one of our all-time favorite charts is the JJ bars, and that's a type of chart that we recently just developed that's going to be our overall top-of-the-line best entry chart that you can get. Now, we developed this kind of on a proprietary bar type where we're using a hybrid between range and Renko. Now, the reason we did that is because it makes entry signals really clear. It's hard to miss when you see a 1, 2, 3 into a golden wave. It looks the same almost every time. It might be different sizes as far as the width and the height and everything goes, but other than that, it looks pretty much identical. These candlesticks are going to be superior. It's going to be the best versus all of the other candlesticks that we use. Now, you can use JJ bars for entry time frames, for anchor charts. You can pretty much use them for anything that you want, and we're going to put the most weight on them because there's so many different variations and calculations going on with them that they take into account a lot of the things that the other charts already do anyway, and we roll it all into one nice and neat package into the JJ bars. So that's an overview of the chart types that we use and when to use them. If you have any questions about it, feel free to send an email to School of Trade. We'll be sure to get back to you as soon as we can. Have a good one.